Hi, this is Anthony Parent of IRS Medic, and thanks for joining us today. We're going to be talking about residency-based taxation, some claimed fixes to it. Joining us today with Keith Redmond and John Richardson is Karen Alpert. She has been a guest on before. We were talking about the U.S.-Australia tax treaty. Karen, welcome back. Thanks so much for joining us today.
I'm happy to be here.
Right on. So what do we have going on here? And maybe the first thing we need to start about, if we're going to be starting about a so-called fixed to our citizens-based taxation, we need to discuss what residency-based taxation is. Karen, do you want to lead us through that?
Yeah, well, I think it's actually pretty simple.
Okay.
Residency-based taxation is taxing your residents, a country's residents, based on where they live and where they're using services. So taxing based on residence. Whereas what the US does is they do tax based on residence, because if you're a Mexican citizen living in the US, you're taxed by the US. But they also tax based on citizenship, regardless of whether where you're resident. And the US is really unique in the way that it does that.
Mm-hmm. Right. No one else in the world does it. And that's, and you bring up a good point. There's the two parallel systems. Oh, your residency if you're here, but if you're a person, so the U.S. gets it both ways, any way it wants. Yeah. Anything to add to that, John?
No, I think that's about right. I think it's important, though, perhaps to add, and this is something that Karen and I have discussed numerous occasions, is the way the Internal Revenue Code is actually drafted. Nowhere does it say citizenship taxation. What it says is every individual on the planet, in the galaxy, past, present, future, is subject to U.S. worldwide taxation unless, in Section 2, you are a non-resident alien. And Anthony, in the 21st century, to be a non-resident alien is the gold standard.
Absolutely.
Yes.
Well, we have a proposed law coming out. We have House Resolution 6057. This one is sponsored by Representative Beyer, Titus, Maloney, and Salazar. They're on here. And so it's, 6057. It is called, what is this? This is called, it has a great name, doesn't it? It's Tax Simplification for Americans Abroad Act. Here it is, guys. All of our hard work has paid off. Now, you guys have to be excited about this proposal coming out. Karen, you must be thrilled about what this bill is going to do, aren't you?
Yeah, not so much. Because really all this bill is doing is expanding the types of income that you can exclude from your income under the foreign earned income exclusion.
Okay.
So, I mean, yeah, that's not bad. It probably will help quite a few Americans abroad, but you still have to do some computations to figure out if you make it under their thresholds, and to figure out how much income you have, because that's calculated under U.S. rules, not under the rules where you live.
I'm thinking in my head, and I know what I just read. I know what you're just saying. I'm having a little bit difficulty reconciling too, because the second word of this bill is simplification, Karen.
Correct.
Yeah.
Yeah. Well, so we're gonna make you do all the same computations so you can figure out everything, but we're gonna put it on a simpler tax form.
All right. What do you guys say we go and do a deep dive into the code? You want me to grab the screen share and we go through it?
Sure.
All right. Let's see how this is going to play out here. See if Karen's telling the truth or not. Or, I mean, really. All right. You guys have my screen yet? Or no, I didn't start it yet. Hold on. I actually didn't. I have to actually hit the right button to do that. Let's see here. And I want to, there we go.
There we go.
There we go. All right. Isn't that wonderful? All right. Look at that. I mean, this looks pretty good here. Now, could you guys read it? Do you want me to zoom in a little bit more?
No, it's good.
It's good.
We're good.
It's just me who should be wearing readers, I guess. Okay. Anyway, Let's see here. So here we go. Keith, we haven't heard anything from you yet today. I think you should chime in here. What do you think about it?
Well, I mean, I agree with what Karen said. And and Karen, correct me if I'm wrong, the expansion is of the foreign earned income. It's earned income. This has nothing to do with unearned income, correct?
Well, except that what this does is it takes what is currently a foreign earned income exclusion and it adds a bunch of different kinds of unearned income to what you can exclude.
So that means retirement
yes.
will be, okay.
Okay, so let's go through this. So now the current issue, and Karen, explain the current issue that we have, and maybe some of the things that drove at least the attempt to write a bill behind it. What's the difference between, why does a foreign income exclusion matter in this case?
Okay, so the way it works if you're an American living overseas is you have your choice of two different ways of calculating your US tax on your worldwide income. You can take your earned income and subtract out about 100,000, which covers it for most middle class, taxpayers, and then just pay U.S. tax on your unearned income, which again is not going to be very much for most middle class.
Oh, you know what? And I think we need to define a term of art here, because this is really driving people nuts right here. But the difference between earned income and unearned income. And it's sort of a backwards way if you think about it. If you work for a living, that is earned income. If you get dividends, interest, that's unearned income.
Unearned income, right?
Yes.
So,
but if you get unemployment benefits, that's not earned. If you get retirement income,
that's not earned.
Not earned.
Right. And this is it's a pretty obnoxious way the IRS discerns these earned and unearned. It's all earned. It's really obnoxious that they do these terminologies. And so that's something that just can throw people off. Well, what do you mean by that? So your wages are something you're usually kind of can deal with as an expat. It's when you get hammered with your retirement and then things that they say are retirement that aren't retirement, or things they are saying it's retirement that isn't a retirement.
I'd like to interject just one point, and that is just because there is a fallacy out there, or a misconception, is that foreign earned income exclusion is an exclusion on the first, $100,000, let's say, where you're excluded from U.S. tax, but you still have to pay tax on that in the country in which you live. So this is not free money. You still have to pay tax on it. And a lot of people have this misconception, is that you don't pay any tax on it whatsoever. So I just want to make that very clear, that it's excluded on the U.S. tax side.
Yes, all of this is just about the U.S. tax. And any American living abroad has another tax system to deal with. So, so what this is, I'm really confused by that first paragraph in A in general, up at the top.
All right, let's go paragraph A.
Paragraph A, section 2, paragraph A.
Okay, there you are. So let's get into this. Okay, so go ahead, Karen.
So I'm really confused because I can see where 1040, 220, 1040 is your just general income tax return. The 2555 is that foreign earned income exclusion. Mm-hmm. And the 1116 is the foreign tax credit. So what this is saying is the Treasury, the IRS, has to make available a simplified forms that's going to replace all of these forms. Well, it's going to, I can understand the first three, but the 5471, that's for controlled foreign corporations. And there's nothing in here that says that you're going to get out of being a controlled foreign corporation, get out of having to pay or anything like that. So how is the foreign going to replace the 5471?
You can't, because they're two different, right? You can't do it without a change in the law, that you have to change what a 5471 means.
Yeah, so that one just kind of, that 5471 in particular sticks out like a sore thumb. The 3520, I'm not sure they make changes in that area of the code either. That's the trusts.
Well, when I was reading, is the part that made me laugh of this is is that when you go through in the side there, where it says, such forms shall replace forms 1040 to how do we say this one? 2555, I guess.
25.
11, 16, 54, 71, 35, 2708, and other forms. They're like, well, we don't really have the time. We really don't have the time to go through what's there. So we'll just sort of put a catch-all, what could be there. And it will probably get simpler that way. That is probably that has to be the one of the funniest things to ever come across in legislation. That it's a little too much for us. Look, we're just the people writing the laws here. You gotta go to the experts to find out what it could mean. And then there's also the 3520A is missing, and that would seem an odd.
708. Why is Form 708 in there?
Yeah, that's a
an estate and gift tax form, isn't it?
Yeah, right. I don't know why that's what that is.
708 doesn't even exist, actually.
No, it says it's U.S. return of gifts from covered expatriates.
Exactly. It's an anticipatory form that has nothing whatsoever to do with Americans abroad.
Oh my goodness.
No, it's very, very clear that whoever wrote this doesn't understand what this is about at all.
Okay. Yeah. This looks
like
imaginary
forms, Anthony. Imaginary forms and legislation now.
Well, and one of the things that we noticed is that as we watched, with the voluntary disclosure stuff, how the IRS FAQs become sort of the de facto law, and that asking a question and getting an answer from the IRS and it's on their website, well, that's kind of your law. You're advising your client on what to do, and that's the law that the appeals officers is following. And so here, and I always said, so basically, and this is sort of something I've said for years, it's like, well, when you come down to it, it's basically we're ruled by HTML is what it is. And this law reads like it's from the IRS website. So it's somebody mirroring the new de facto law into the law. It's, it's mirroring upon itself and now becoming what the law has mocked. Amazing. All right. What else would you like to say, Karen? Want me to move down a little bit more?
Yeah, we're ready to move down.
All right, we're ready to move down. Okay, we had enough fun with A there.
Yeah.
So here we go, and they're going through, okay, characterized incomes, including on this.
So what they're saying here with these 1, 2, 3s, etc., is this is what the form should be on the form. The person has to demonstrate that they're non-residents using the substantial presence test. They have to declare. Yeah. Well, I mean, that's the same test that you use if you're an alien, a non-U.S. citizen with presence in the U.S. Then that's how you determine whether you're taxed by the U.S. Right?
Yeah. Karen, I'm starting to think you're right. I don't think this simplifies things.
So you've got to have enough on the form to show that you're going to meet the substantial presence test, or you're not going to meet the substantial presence test.
Which is so essentially every tax, in order to simplify everyone overseas, is first step. Let's do a de facto substantial presence test every year. Let's run through that. Right? And the thing is, if you're wrong about it, did we tell you about those 5471 penalties of the thing that actually can't go on there? Did we tell you about anything? Now, and if you notice, what is missing on this? Which makes sense. I mean, they don't have Form 8938, right? Because that would be too obvious. But I mean, they're missing the FATCA form, and they don't have FBAR on it. They didn't mention the FBAR, which is Title 31, but still, why, if we're playing with laws, why can't you say, we'll also amend a Title 31? Yeah. Why can't we just say, by the way, we'll also
Title 31 at the same time?
Well, I think we have an answer to that question. Can we pause for a second? I mean, Anthony says, why can't we do this? Why can't we do that? I'm going to propose an answer, and I suggest you agree or disagree. Answer: because this actually reinforces U.S. citizenship-based taxation.
Bingo.
Yep.
Oh.
This is not RBT. It is not.
Absolutely not RBT. It's also completely incoherent.
Right.
I mean,
Yeah.
Karen and I could actually redraft this for what it should be, even if they want to retain CBT probably in this conversation. But the whole point of this is, especially if we're talking, if they have mentioned 5471s and 3520s, it also should include any foreign income whatsoever, which would include subpart F, guilty, transition tax. It would include throwback rules on foreign, et cetera, et cetera. But they have not done that. Right? But the main point here is, and I think everybody needs to be absolutely, positively, 100% clear that this proposed legislation actually reinforces U.S. citizenship taxation.
Well, it requires an annual return. In order to use this, you have to file their, special 1040 EZ for expats. And you have to declare the income described in 911, which they're going to amend, and tell them what kind of income it is. In order to do all the stuff that's listed in 3, you've got to do all the calculations that you have to do anyways, currently, right? I mean, how do I know if I've got, it's got a $400,000 ceiling for income, but the earned income, or the new section 911, which is more than just earned income, but it's got the same threshold that 911 currently has, which for 2022 is $112,000. So you're going to have to calculate that your wages, plus your contract income, plus your foreign government benefits, plus your pension and other retirement income, scholarships, fellowships, etc., all of that stuff added together and calculated under U.S. tax rules in U.S. dollars is less than $112,000.
So Karen, after saying all of that, who is the audience this bill is meant for? Who?
Look, this would you'd probably be all right if you're a average income wage earner and then through your retirement. Okay. But you're still going to have some calculations to do to put the numbers on the form. Don't you agree, Anthony?
This is a nightmare because I'm thinking that's when you start talking, I was thinking, okay, if we had to actually implement this next year, would be terrible. This is absolutely terrible. This would be infuriating to everybody because it's like, and I was just sort of thinking the analog is it's like an alternative minimum tax regime that you have to kind of do. You're doing a parallel.
Right.
And so you have to calculate these two things. And the problem, the huge problem, is the consequences if you get it wrong.
Right. And this is
like the number one problem is you can tell they're not serious because it's not inclusive. Number two, no one's even thinking of the real problem. Oh, and the problem that we have that we've said isn't necessarily the check that expats around the world are sending to the IRS to be in tax compliance. That's not it. Many times they don't know anything. The problem is the massive amount of tax compliance it costs to do this. That somebody with normal stuff, a normal person, could seriously end up with a tax bill of $2,000 a year to prepare this stuff when they don't make it, and they live in a country where they, let's say, plant trees for charity. That is the problem that we have.
Given the way that's written, Anthony, how would you treat a foreign mutual fund? Would that be excludable? It's a dividend.
The fund would be a P, right? I don't know where that goes. Well, we didn't even talk about a PFIC, did we? In this,
no, because it's not listed in their forms.
I believe it would be excluded.
It would be excluded, but you'd still have to file the form.
How do you get it out of the 8921?
Yeah,
I'm not so sure on that because if they're excluding the income, I'm not. I think arguably that would end the requirement for the 8621, but it's very unclear. But again, everybody.
But and again, there's another one of the forms that didn't make it into the the short list, right? That form wasn't good enough to get there. Like, oh yeah, and the other one, like
it's
like
under the others.
Like this, sure.
Right. But I got a question, guys. And still with the initial question I had. So it sounds to me that this is really only quote unquote applicable to those Americans overseas who are actually in the U.S. tax system. Because from your expertise, where is the incentive for someone who's not been in the U.S. tax system to enter? Where's the incentive to do this?
They're bored.
They want to spend $2,000 a year just to enter.
Yeah, they want to have a new exciting relationship with a U.S.-based attorney. I don't know.
So I don't understand the objective of this bill. What is the objective overall of this bill? Because it's not RBT and it's not tax simplification. That's where I'm lost as a layperson.
I think you're supporting John's theory. I think that's what it is. This is just reinforcing the entire idea, and maybe this is a a test run of something else that will come down. And I don't think, and that's the thing, I don't think this is going to actually seriously be introduced. And I think because of its poor writing, that this was not written by somebody who with substantial knowledge in Washington, D.C. This was written by a staffer. Okay, throw this together. Okay, make it look good enough. And then a friend looked over it to make it look a little bit more, codey.
It sounds to me like it's written by someone who thinks if the form's simple, the compliance is simple.
Yeah, absolutely. Yeah.
Okay. If there's only two numbers on the form, then the compliance must be simple. But there's an awful lot of computation that goes into coming up with those numbers.
And not even computation.
Especially when you've got someone who's living in another country and using a different currency.
Yeah. All right. So, and right, this is written by somebody who doesn't know what the issue is, and just okay, sure, this is not, like somebody who could be an intern. Maybe. So there we go. So let's talk about. Should we go down to specified individual? Is that interesting at all?
Qualifies.
Oh, here's our substantial presence test. And wait, who qualifies as a non of a spouse?
Yeah, that's kind of weird. The spouse of a non-resident citizen.
Yeah, what's with that? Spouse of a, huh?
Where are you seeing that?
B1A.
Yeah, let me move that over there. B1A. Specified individual.
What in the world could that possibly mean?
All right, I'm glad you're all right. I am so glad you guys are confused. Okay, because I'm like, I am all right.
So like you've got a couple where one person's living in the U.S. and one's living outside of the U.S. Or one triggers the substantial presence, but the other doesn't. And the one that
so simple. I'm finally, Washington, D.C. has delivered on its promise. It's so simple.
And the income of less than 400,000, is that per person? If we're married filing joint, is that per person?
Oh yeah, this is an early draft, you see. Oh boy. Okay, we could have
and you guys are the experts. Think about a layperson trying to decipher this.
And I think this is, and this is, I think that the point that we have is that, one of the as authority expands, it dilutes. And as we've had the IRS try to cover everything, there's simply not enough expertise to go around everywhere. The person that would have been making this bill look somewhat at least understandable isn't there. They're off doing something else. And that's what we have. There's just a shortage. And because there's too much to do. There's just way too much to do. And that is what is actually, and that's what's going to bring down the IRS. The IRS will. We're not going to be able to, but that the IRS can certainly, the IRS is powerful enough to bring down the IRS. And let's see. So expansion of income allowed as foreign income. Okay, here's our section here where they put it down. I'll just go slowly there. You guys shout out if you see anything fun. Okay, just strike in and out. I need strikeouts. Okay, is that the end of the act? Oh, that's it. Well, it just
That's
ends.
Yeah, it's short.
Well, that was
It's simple.
what? That's it. Like, it's terrible. Like, that's my dad had a quote. He went to Admiral Farragut Academy in the 1950s, military boarding school. His parents asked him how the food was. He goes, "It's terrible and not enough of it." That's what we got here. This is terrible, but like we were just getting going. Oh, okay. Well, we have to. Well, we have another one coming up.
Well, you know what, Anthony?
Yeah.
We have this, but wait a minute. Maybe the ACA proposal will be better.
All right, so we're going to get that. You want to do that one next, or is that one?
I think so. I think it should because it is out there.
What's that?
What all these proposals have in common, every single one of them, is they retain citizenship taxation.
Yeah.
Right.
Why are we? Sure, we can analyze them and show how horrible they are, and they are. But the real problem is they retain citizenship taxation, and by retaining it, they reinforce it.
Right. But I think it's important to kind of go through at least a few key points to really own in for the people who are listening that it is indeed citizenship-based taxation with some minimal carve-outs, and that's all it is.
And I would say, I think my key point, and the thing that I want to drive home for people, is that if you're sitting back and you're looking at your representative and they're like, oh, they're really on my side. This person's really on my side. I really want you. You really got to take a look at what's really being proposed here, and it's just not. It's just not on your side. This is simply making it look like, giving some of the appearance that they're helping you, and there's zero help, and it's not even a serious bill. I don't think this is serious. I mean, I don't think come on, guys. This isn't not even close to what could be considered. Right. I mean, no one could, it's a ridiculous, and it's really what I would say. And as I said last week, it's more of a publicity stunt. That's all it is.
And it's disingenuous to call any of this stuff proposals residency-based taxation, RBT. It is not. At all.
Yeah, well, this one doesn't even pretend to be, so that's in its favor. But you know what? You're right, but people are calling it RBT nevertheless. And I think it's very important to drive home the fact that it is not, absolutely not whatsoever.
Well, and I think the other thing too, it's not really simple, is it? There's the other thing. Yeah, no, they missed that. So it's kind of, I would classify it as kind of a lie all the way around, and kind of dishonorable that they would bring this. And it's kind of insulting, but that's my opinion on the matter.
It's not a lie, Anthony. It's written by somebody who doesn't understand the issue well enough to do something that really can help. It's not a lie, okay?
It's not a lie if you don't try hard enough.
Lack of understanding.
If you don't care, it's not a lie. Something like that.
What's that?
Well, your quote. It's not that they don't care. It's that they don't.
They don't care. They don't care.
They don't care. That for some reason that's going through my head right now.
Yeah, it's a good example of that. It's not that they don't care, that they don't care, that they don't care.
Yeah, but it's also what they don't know. It's also what they don't know with this. You had somebody, a staffer, put this together, possibly. Hopefully it was a staffer, because if it was anybody else, it's really not very good. They don't know what they don't know.
Yeah, well, on that note of they don't know what they don't know, one thing we didn't talk about on the podcast is how the things that were, when they amended the types of the 911D thing, okay, they left out the 402B pensions, right? You remember that, Karen?
Yeah. Well, it says pension and other retirement income. It's pretty vague, right?
Yeah. We're laughing at the vagueness. That's why we're laughing. Give us some direction there, right? So our next one. So we're going to be on our next one will be July 5th, and that's when you want to tackle the ACA proposal.
We can talk.
Sure.
About that. I think that's less clear.
Or do you want to do, because we have the other one we could do too. That's coming up. The third one of this series. Maybe we should stick with that.
Well, I think we should talk about the ACA proposal because it is out there.
Oh, it is out there. All right, well, let's do that next week.
I mean, it's out there. Yeah. I mean, it's there. It's important.
And then the following week, we'll do the Commission on Americans Living Abroad.
Exactly. Which is actually, you know, in essence, it's a good one to support. Why not? Why not have a commission? But
I don't know about that.
I know you have your views, Anthony, and we'll hold off on our discussion on that. That podcast.
Right. Maybe we'll disagree. That people can chime
absolutely in. Not a problem.
We welcome any real opinion. We welcome, right? Any actual real opinion is welcome. What you're actually experiencing. All right. Well, I think we should wrap it up here. Wow. Karen, thank you so much for joining us today, adding so much to it. And you've been working so hard on, I mean, you know more of this. You and John are some of the top legal experts on this. And I really appreciate you sharing your time. And Keith, you are just so valuable telling us what's actually going on. Yeah, right. Karen, I'll give you some concluding thoughts. What is the next? What do you think is going to happen here?
Oh, well, this is, like you said, a publicity stunt. It's there so that he can tell his constituents that that all of these people have co-sponsored the bill. They don't expect it to pass. I just don't see anything happening. Certainly not this Congress.
Yeah, I concur. I would concur with that assessment. Well, fantastic. All right. Well, thank you so much, everyone. Thanks for joining us. And we will see you on the next time, July 5th. We'll see you next. Thanks again for watching.